In Thursday's video, you may have seen a little thumbnail like this that was discussing, while everyone was talking about the complete collapse of this, us overall discussing how this thing would most likely have about 48 hours or 2 trading sessions to really prove itself. Now, as we get into these charts today, we are going to give you guys some updated daily expected moves, but it is a good thing that we are paying attention to that on Thursday and mentioning that because overall on Friday, that big buyer stepped up, and over the weekend, we did have some discussions to have over there. So for today, we're going to get you those daily expected moves. We're going to talk about this move so far and what we can overall look for next based on the information that we have in front of us, based on how the market has proved itself, and based on the fact that we did not take out those critical levels. So let's get into it. Well, and there were some other things that we were talking about over the weekend, right? The sell signal confirms, but now that but was indicating that we did not see the structural breakdown. We did not cut out the bulk of the liquidity in this area. And so that led us to the next video, which overall went into this is a bad idea. And it is an overall bad idea after a big drop where things are very oversold, going into a great source of liquidity and not breaking down through those critical levels, right? These critical levels down in here that you are going to see major downside. No, that is most likely going to be a trap, and you need to see the next move, which is happening right in front of us. Now, why am I showing off those thumbnails? To help you understand that in order to firmly call a top, and we've done this before, right? But overall, to firmly call a top, you need multiple things to prove themselves. You don't just go off of the sell signal. That is what a lot of clickbaiters and people who just want views on YouTube will do. We mention those things, but we also mention what would need to happen to actually confirm that as a top. That is why the video from Thursday was very important. That's why the weekend videos were very important to discuss. We have not lost critical levels, and I even have a tweet from October 23rd that I put out there. And no, you don't need to follow me on Twitter. I really don't tweet that much, but I did say signals are still bullish until we take out 657 on the SPY. That was back then, and I still have the same attitude towards the market at this point as far as it stands. I think if you're not even taking out 657, there's not a lot to worry about. So we're going to get into these today. We're going to get really, really heavily into these charts. We're going to mainly be talking about the 2-hour scale and be talking about things here, but make sure that you understand, yeah, you need multiple things. Yes, you can confirm a sell signal. That's one piece of the puzzle, and you might take a trade based on that, but you might want to do your homework in the shorter time frames. Also, the other thing that needs to break down is, well, you need to break the critical level and the trend, okay? There's 3 really big things that you overall need to break down, and that would overall be, you need the price action to go down, which could be taking place right now. And then you also need to break that trend by breaking the previous lows on the macro scale. So we'll go into more and more of this throughout the week. So I know this is kind of a crash course here. Sorry to say crash in the video. I know people get a little excited about that, but we were correct to point out that the market had a couple of days to figure its stuff out. We were like, yes, this is a big move down. Yes, people can get really, really worried about it. But as far as it goes, we were able to catch ourselves back here, and we were able to get things correct then, right? And look how it is deep into negative territory at that point. Well, at this point, the 2-hour scale was able to go positive, to take back that 5-day moving average pretty confidently. So this is a big deal. Okay, we're going in depth to this because this is a big deal. And look at that MACD. It looks better than the last time. So we are going to use a lot of language that we kind of used back in here. We're going to look for those potential opportunities if the market proves itself to give you the opportunity. That means we can't tell the future, but it is something that we will be prepared for. Let's get you guys the daily expected move. 687.70 to the upside, 678.30 to the downside. As far as it stands, 2-hour is positive in positive territory, taking back the 5-day moving average. So you would overall be hoping for some kind of 30-minute dip, to be 100% honest with you. You would really want here this 30-minute and the slight divergences that we have formed at the end of the day. I wouldn't read too much into those and think those are crash divergences. If you want to see a crash, you need to break down critical levels and most likely see a bounce and roll that move. It's going to be very tough. This market's been bullish for a very, very long time. It's not going to be easy to just tip it over, and people are getting overexcited. So What you would overall like in this time would be for the market to prove to give you a pullback down to something like 673, even availability all the way down to about 666.50. So 666.50 would be a great area to watch for. If it comes down into those areas and we see the buyers step in, well, then we can go up, and we are very likely at the end of the week going to end maybe even outside of the weekly expected move, even though our 68% zone is down here. Well, we did get news, right? News that someone knew about on Friday before you did. Okay. So it's just another time where the market's proving that people know things that you don't. So pay attention, and momentum can really work for you. We are heading up to that weekly expected move. Yes, we can see that euphoric little push here, but that would say that we really need to digest and get some kind of pullback. We don't have to revisit these gaps. This is more if it gives it to you and you see things turn around, that is where you test the high, go make a new one, and you might start to head to that glorious number of 700 by OpEx. So at this point, that's what we're looking for, is some kind of 30-minute pullback looks very probable. Why is a 30-minute pullback the most probable? Well, yes, we do have divergences, but they are extremely elevated on the MACD, meaning that we can pull all the way down to the center line. We can see a full day's worth of selling and even see little hiccups and come into selling on Thursday and still end up turning to the upside. We can see this leak out, come down to that center line, and then curl up into positive territory. And that is very, very probable. This looks very, very similar to what? It actually looks similar and even better because of the bullishness. It actually looks similar to this point right here, where we're kind of just trailing to the upside. We fall down to go collect, right? Take care of a gap and get into those good buyers again, and then we curl to the upside. Right? This is where things can get really, really nice for you if you see a dip. This would mean that the bulls have done enough to take control now. If the bears, right, we're going to mention the bears too. We're going to mention you guys. If the bears want a chance for this thing to really roll to the downside, I think you need to be taking out this level right here, which is pretty much your weekly expected move. I think you need to curl down, and you really need to break through these levels without creating any divergences. Asking for that right now is going to be tough, and we're going to show you some more charts to show you exactly why that will be a little bit difficult, especially when we get to volatility in just a moment. Now, Patreon members, you most likely have already heard this information, right? We put out a video yesterday. My wife had 3 appointments yesterday, so I couldn't make a YouTube video, but we made sure to update Patreon. So you guys should already be understanding what's going on here. And this should overall be a refresher because we didn't see too much today. We really didn't. A lot of people are out there suggesting that this could be your 2-hour lower high that sends you to the downside, and it very well can, right? Let's talk about the bear side first. We'll give them some love. If this curls down, it's not necessarily like a good thing, right? If this curls down, as far as a trader's decisions go, if the 2 hours curling down in negative territory, I'm not necessarily like, yay, let me buy those calls right now. But if that 2 hour would curl down into these areas, into these great buyers throughout all of this, anywhere in there is good, but I would say something like a 610, 612 would be very nice. And then curls up into positive territory, heck yeah, I'm going to the bull side. Like, that's what that means. So let's look at some critical levels for tomorrow and look at what's very probable, because the 2 hours just about to go through that center line. We'll see what happens with it in a moment. We do see 628.13 to the upside. We see 614.89 to the downside. If we go into the 30-minute chart, this one is closer to the center line for the Qs. We are kind of bundling up, but there are times like this where if you do not get bad news, if you fail to break through the critical levels and you don't get bad news, but instead get little bits of good news or possibly good news, like bigger good news at the same time, you can gap up. You can kind of sit in those type of areas, maybe pull down into the gap a little bit to a daily expected move, and then you can gap up, and then you can pull down into those areas, and then you can gap up, and then you can pull down. So we could keep this train going. We've seen it happen before. As it stands, the 30-minute pulling back down into a price point of about 612 to 610 or gap fill around that 609 area would be the best opportunity if the market proves to give you one. You can utilize your daily expected moves. If we get a massive move to the downside and you see at the end of the day, this is down in those critical areas, maybe you do your homework, you little day traders on those shorter time frames, you can see if this 30-minute is going to confirm back to the upside, and that would overall suggest that this 2 hour is going to keep going, and we potentially will be curling up daily charts. Now, the cool thing about the Qs, if you've been sticking with this channel for a bit of time the last couple of weeks, we did mention that the Qs gave us the opportunity. And this is a lot of the reason why I was not shouting from the rooftop stock market crash, even though all the sell signals were confirming. I was very patient this time around, right? I was very patient to see if we would break through these levels. I was very patient to see, hey, we need to see that next 2-hour move, right? We need to see if the 2-hour fails and things like that. What made me so patient about that? And if you're part of this channel, hit that like button, because you were watching when we were discussing how the Qs do not have the reversal signals anymore on the MACD, and they have a very flat reversal, if not slightly, yeah, pretty flat. We'll still say flat. And so we drew what? If you watch the video over the weekend, you can literally see us draw this. Well, we might see one more move up like this, right? We might see one more euphoric move to November OpEx, and then we see that next divergence point as we tag 700, as we potentially tag 650 for the Qs. So something that is very, very nice for the Qs the last couple of months is, even though the SPY and volatility have shown us, hey, we're going to crash down, the Qs multiple times now, I would say 3 to 5 times, I believe, in the last 2 months, have made us stay aware of the other side, have made us stay aware that this does not have reversal signals right now. So thank you to the Qs right over here who told us about this move. Thank you to the Qs now who are telling us that this move to about 650 is very possible, because we do not have those reversal signals on the MACD, and we have weaker reversal signals on the RSI for the Qs than the SPY. And once again, this is why it is very critical when we talk about these things. Actually, in the course that's going to be out for Black Friday, the Black Friday deal is going to start up soon. I might even put it up early before OpEx in case some craziness happens around VIXpiration, around OpEx, because I believe even some votes for the government shutdown and things like that. I think that stuff's coming up too. I think they might have postponed some things. I don't know. I haven't stayed attuned to it. I just like to watch the charts to be 100% with you. We do, because someone knows before you do, right? We saw that big booming move on Friday, and then Monday we get the big gap up. Someone knows before you do, so it's usually better to watch these. What was the main discussion on volatility? Well, volatility, the main discussion here was, oh, yes, we're confirmed to the upside. Are these great bars? These are terrible bars, especially the Friday bar. We discussed this over the weekend. Closing below the 200 here is a huge problem, and now we are seeing the confirmation of that really close to what? Really close to the center line. This actually, if you want me to discuss this exactly how it should be discussed, which I'm going to have to be 100% honest, right? I have this channel. I want to be 100% honest. That's what I really told myself. I have to be helpful, which means I have to be honest. And the honest thing here is, this curling down by the center line like this really makes you go, oh, wow, we might just boom to 1212 by the end of the year. I have to mention that because that can happen in these areas. Am I leaning towards that at this point? I think that we are going to see some disruptive behavior towards the end of November now. I think it actually could be directly on options expiration. So as we look at the 2-hour chart here, this is where we can get that reaction where you might actually get an opportunity, right? If we're going to go see new all-time highs, what did we say we wanted to see from volatility? We want to see volatility break this level. Did we break that level? Well, let's see the low point here. The low point is 1731. The low point here is 1725. So that has been broken. We left behind a gap. What is very likely to happen here? Actually, you have 30-minute divergences, right? Those 30-minute divergences, they're kind of getting violated. They're very wonky. They are not worth taking, right? It's very, and I'm sorry, I'm still a little sick, but it's very difficult to trade against a trend. You've probably heard that a lot of the time, because you can literally hold sideways and then just gap up and things like that. So you want to go with the trend here for the SPY, which is still technically up. As far as VIX goes, it had an uptrend. You wanted to be with that trend. But now that we've broken this low, you can see a reaction up. That might be our 30-minute pullback for the SPY. And then you can see that reaction down. A lower high is way more probable with how this is shaping up, with the bars that you're seeing here for VIX, with the MACD positioning in negative territory pretty deep there. This is suggesting that we are going to head to the downside. And it is very likely for us to do what now? it is very likely for us to actually go down to that 1504 and set up reversal signals if we are going to see some kind of disruptive behavior like I am kind of thinking is going to happen. But that means we should have our bull hats on for a little bit of time and just be aware of anything that's kind of crazy that we see in front of us for reversals. So by that 1504, something that I was suggesting was funny and weird that we didn't go test back in these times. I go, hell, that's interesting. I really think we need to go to that 1504. People need to be more bullish than this. The fear and greed index is still in fear, but you can see bad things there, but you'd rather have it in greed. You kind of want that opposite opinion. So we do see here that we can actually get a reaction up. This is the important part for this week. If those 30-minute divergences get it right, you can get that 2-hour pop to the upside. That is negative, so it is very likely to potentially fail. And if that fails, I think you're heading down to 1504 into options expiration, where you will potentially set up a 2-hour divergence. That means that we can actually see this chart curl all the way back down, right? We can come all the way back down to 1504 for kind of like that A, B, C, and then we're just going to see that daily curl up into positive territory on or around November 21st, which is options expiration. Much of what I talk about are things to be aware of, ways that this market can move and you have to react. And something else that we really look at is decision making. Was it a good decision to see a plummeting move like this, where everyone was buying volatility, where everyone was buying short positions, to buy it at the low when we have not seen any kind of lower high, when we have not seen any kind of divergence? Those were the topics that we talked about over the weekend. And actually, we talked about that a little bit more on Thursday before any of this Friday and Monday stuff happened. We were suggesting that the market overall had 2 trading sessions left to save itself for the bulls, or else you were at those critical levels of breaking through 657. Now you didn't break 657. So this really tells us that we need to pay attention to what's most probable here. What is most probable is you did not make a new macro low for the daily, for a 4-hour chart, anything like that. So when we look at these shorter time frames, the very important thing here is to understand this is very likely to continue or come down and then give you that opportunity to continue. That is the most probable thing in this area. If you are going to see something disruptive now, then you are most likely going to see the 2-hour curl down. The 2-hour curling down will be your sign of, hey, maybe I don't want to have my risk on, but I want to be ready to react in case it curls back up with a higher low. That's overall how I'm looking at the market at this point. I wanted to stay out of those put positions down in here. It really seemed like we were going to get a reaction and people were getting overzealous for downside. And then at the same time, I'm overall looking for the pullback now that the market has proved itself and said, hey, I kind of want to go up, possibly to 700 by OpX. So that's where the market's shaping up as of right now. I hope that this information is overall helpful to you. As of right now, I would be looking for 30-minute or maybe hourly pullbacks into the potential gap or gap fill. That way we can see if the buyers can step in. And if we see confirmations down in these areas for further upside, well then, you bet your bottom dollar we're going to be testing this high, or at least testing this high, going to make a new one, which means new all-time highs, and the level of 700 is very much so on the table for November. Thank you guys so much for watching. I really, really do appreciate it. I hope you guys have a great rest of your trading week, and I will try to upload another video tomorrow. All right, peace out.